Hey everybody, Alex here, and welcome to Momentum Charting, where you will always get my 100% unique perspective on stocks, on markets. I never, ever use my feelings, my biases to predetermine my conclusions. I examine the price action, I examine the charts, I look at trends, I listen to the markets, not the noise. Guys, if you have not yet done so, jump down below, hit the subscribe button, hit the bell notification. Doing both of those will ensure you do not miss a single update in the coming days, coming weeks on this channel. Lots of cool stuff coming up in the markets in the very near term future. Subscribe to the channel. Thank you, guys. So today I just wanted to kind of shoot this video that I thought was important and I thought might be a little bit different, a little bit interesting, and different in a way from the normal just technical analysis videos I do on individual stocks. So I was going through my watch list today, and I kind of understood on a basic level what was happening in the market, but until I started really going through some of these charts on my watch list, some of these individual stocks, it wasn't as apparent as probably it should have been. But it is, I'm not sure I've ever seen quite this type of a dichotomy in markets. Guys, right now, if you are not in the right stocks, if you're, I don't think it's necessarily sectors, although it does have something to do with it. But if you are not in these stocks that are participating in bringing these broad markets to the upside, you are getting absolutely wrecked. And I probably don't need to tell many of you that. A lot of you are probably in some of these types of stocks that are just getting absolutely killed. I was going through my list here today. I'm just I just have so many, and I want to go through a bunch of these with you guys just to kind of give you a general idea of different stocks that I do think have upside and different ones I just kind of dismiss at a glance and reasons why. I do want to look at that with you, but it's like just a stock that I think has a good outlook, good future, but just, I mean, getting just absolutely killed, right? Lemonade, it's a casualty insurance company, but this stock, I mean, over the last, let's see, since early July, let's take a ruler to that. I mean, it's down almost 43% just in the period of 6 weeks. It's just crazy, and there are so many stocks like this. I mean, the list goes on and on. If you are not in the right types of stocks right now, guys, if you are in high-risk stocks, okay, stuff that was working like towards the end of last year, the early parts of this year, January, February, high-risk stocks, if you are in like green energy plays, if you are in the electric vehicle stocks, if you are in anything to do with China right now, if you are in penny stocks. Now, to me, penny stocks, how I always knew them in the past were stocks, pink sheet stocks, things like that, literally trading for pennies. But come to find out, that's not necessarily true. A lot of people define penny stocks as stocks in the stock market that trade under the $5 range. So we'll use that kind of more broad outlook and call it stocks that are trading under $5 or so, penny stocks. If you are in high-risk stocks, if you are trading in penny stocks, if you are in riskier sectors, if you are not in the types of broad stocks that are in general buoying these broad markets, guys, you are absolutely getting destroyed right now. There is just absolutely no two ways around it. And I wasn't quite aware of the scope of this until I really started digging into it. But just the massive scale of the stocks that are doing well and the stocks that aren't, it's very, very clear to me, guys. In this market right now, the current market, middle of August 2021, you want to be involved in one of two types of stocks. You want to be involved in broad markets, okay, like for instance the QQQs, the SPY, the diamonds, those are a good place to be, or you want to be involved in the biggest components of those broad markets. For instance, obviously, for the NASDAQ, you've got stocks like the Apple and Microsoft, stocks like that. So you want to be in the biggest, safest components of those larger indices. If you are not in these big, quote-unquote, kind of safer, they're kind of maybe companies that have been around a while, growth is slowing a bit. This is not the market right now where we want to be involved in super risky stocks. To me, the best places, again, to be are like our broad markets, the Qs, the SPYs, the diamonds, and just individually, you have to be very, very careful right now about what stocks you're in, because some of these charts are just absolutely terrible. And we're going to kind of go through them a little bit, and I'm going to show you my thoughts on individual stocks that I do like to be in and some that I don't. And you guys have seen this before on my trading, but you guys will begin to notice a pattern of types of stocks I like to be involved in versus ones that I don't. Stocks that I do like to be involved in or I look for opportunities in always have basically the same set of criteria. They usually have a trend, okay, a dynamic trend, which is defined as this blue line and this green 100 and 250 EMA, which is either flat or working to the upside, where the dynamic trend has not breached the 250 EMA to the downside, okay? So these are the types of stocks I like, number one. Secondly, I prefer stocks that have this 125 EMA moving to the upside. I find this to be a pretty important characteristic of stocks that I look for opportunities in. At least have it be, if not necessarily moving up, have it be moving flat, kind of above this the dynamic trend, where there's a chance for it to get up off the mat in short order and start moving to the upside. Number three, I like to look for stocks that have trends, okay, some sort of structure in place, if not in the longest term, sort of in the shorter term, where you're getting these, consistent series of higher highs and higher lows. So here we drop down, but still there's a series of higher highs, higher lows here. This is Apple I'm looking at, and I'm here on a 1-hour chart. But you can see pretty consistently we're showing series of higher highs, higher lows on this chart. The alignment of our dynamic trend is reasonable. The alignment of the 125 moving average is reasonable. And you have some basic structure in place under this stock of Apple, where we can look for opportunities on pullbacks, and if not opportunities in pullbacks, look for continued acceleration to the upside on the current trends. So that is the basics of things I am looking for always when I am looking for stocks to be involved in. And as I'm going to go through some of the individual charts in my watch list and just kind of comment briefly on what I'm seeing, and you guys are going to get a good feel for the types of stocks I'm interested in and what types of stocks I like to pass on. And along with the these dynamic trend in a good alignment, the 125 EMA, the 200, the moving average component looking decent on the stock. I also don't like to get involved too much in stocks that are stuck in an obvious sideways trading range. I like to look for breakouts more to get involved with that. And another thing I try to steer clear from most of the time is stocks that have showing a very, very clear overhead resistance, stocks that have double top, triple top, quadruple top, things like that. Stocks like that tend to be very, very risky and set for big pullbacks. So I like to look for stocks that showing series of structure, again, I mean series of higher highs, higher lows, have a good trend in place, and just a few basic components I look for. And in these charts, yes, they pull back. You can see here Apple pulled back on January 28th to March 12th, and a huge amount it pulled back to the tune of about, let's see here, almost 20%. But immediately it found support at this line of support, broke to the upside, and started regain its bullish form. Stocks that do not have the components that I listed, the trend lines in their favor, the dynamic trend in their favor, some structure in place. Stocks that do not have those components in place have a much more difficult time getting off the mat when they do pull back. And that's why I always like to look for stocks that have trends in place that are positive and not trends in place that are negative. So let's go through a few and just take a look. Here I'm looking at the chart of American Airlines. This to me right now is a chart that I am not pleased with. You can see here the alignment of the dynamic trend here right now has turned negative, and additionally we are in a downtrend on a 1 hour time frame. Potentially there's something interesting here. It's not the worst looking of charts. There's definitely been worse, but at a minimum I want to see this thing start breaking back above this 1 hour chart. So to me, this is a stock that's a complete avoid and walk away from right now. Looking here at Alcoa. Some of you probably saw my video on Alcoa yesterday. This is a stock, on the other hand, yes, it's been down big 2 days in a row, but this is a stock I'm definitely interested in because you can see the alignment here of this dynamic trend line. Positive, the blue working over the green in a positive fashion here, in a positive fashion here. We have been consistently getting series of higher lows, higher highs throughout the most recent lifespan of this stock. So yes, recently Alcoa has indeed pulled back a good amount. Let's see exactly how much it's pulled back from these highs here. 10% today, and made up a little bit of ground towards the end of the day today. But again, I like the dynamic trend alignment here, and I like the fact that this 1 hour trend looks to me to be working to the upside. There is some structure in place underneath this stock. So for me, I'm looking for opportunities to go long on Alcoa right now. And where specifically am I looking for? One of the things I look at, obviously most of you know, is the momentum chart. I won't dig into that part of it right now, but I am looking for a break to the upside of this overhead downward sloping resistance. And in addition, I am looking for a break to the upside of this 1 hour RSI, a change in trend on this RSI. So that is the basics of what I'm looking for in opportunity in Alcoa. Let's move to the next chart here, Airbnb. This is a chart to me that I am avoiding like the plague. You can see here, guys, Airbnb, very ugly chart right now, working consistently under this dynamic trend. You can see the red under the green, pushing lower, pushing lower, pushing lower. This thing keeps breaking down at every opportunity it gets. You set your 1 hour trend line here, breaking down. Set your 1 hour trend line here, breaking down. This is a chart right now, a stock I do not want to be involved in whatsoever. It's a hard pass for me. AIKI, again, another very ugly chart. You can see this 1 hour trend, downward sloping here. The overhead resistance levels appear very strong. The dynamic trend, the red operating under the green, pushing the stock down, pushing. This is a stock I want to avoid. I am not interested in. Okay, so let's look at the chart of AMD. On the other hand, AMD, a chart that is showing some signs of life here. We are getting this sort of structure where you can see this series of higher highs, higher lows, but I'm not interested in it yet because the chart is consolidating. This is what I was talking to you guys about a chart that is consolidating. It is stuck in an obvious sideways range here, but on the good front, the dynamic trend here is in a positive formation. You can see this blue moving over the green. So right now on AMD, I'm just waiting for an opportunity. Where is that opportunity going to happen? To me, most likely when we break to the outside of this channel, number one, and get some structure on this RSI where we break above this level here around 60 and start putting in some RSI above this level here of 60 and moving to the upside. As of right now, yes, AMD is definitely a chart that's on my watch list. The alignment of these moving averages is decent. The trend, dynamic trend looks okay, but we're stuck in a range, so I am in a holding pattern on AMD. Amazon. This is a chart right now I am not thrilled with, just because of the fact that it is now moved below. We can see this dynamic trend is broken to the downside, but on the other hand, I know that Amazon is a big name. It's a safe name, a big player on the NASDAQ. So I'm going to feel much better about Amazon when we do break this overhead line of resistance and start moving back above this dynamic trend to the upside and getting some structure in place which can start taking us higher. But again, for right now, keeping the Qs a little bit weak, obviously with some weakness in Amazon. If we can break these levels, like you guys can see back here, on June 9th, we broke to the upside in Amazon. It buoyed the Qs, gave the Qs some strength to start working back to the upside, so I'm expecting something similar here on Amazon. Let's look at a stock APPPS, Digital Turbine. Again, a chart that I do not at all like the look of. You can see this overhead, strong line of resistance pushing the chart down. We just have this really nasty negative alignment of the dynamic trend pushing down. Broken down, broken down, broken down. Ugly chart, not interested. Chart of AQMS. Again, extremely ugly chart. Downward, overhead sloping resistance. Dynamic trend pushing to the downside. The red just below the green, pushing down, pushing down, pushing down. Now guys, it is not to say that there are not opportunities in these charts, but to me, the opportunities are normally to the short side, and what I would do is just set my 1 hour trend very simply on this type of stuff. And when you get these massive moves like we had here, for instance, in the middle of May on AQMS, 70% move to the upside, but you can see here hitting the overhead resistance still has this awful bearish look to the dynamic trend line. Just to me, the way to play this is on the short side. You set your trend line. When it breaks it, that's when you're back in the short game. That's a topic for another day. But ugly chart. Oh, also additionally, this is a stock that's obviously a penny stock, down all the way in the $2 range, just been getting hammered on AQMS. Let's keep going, give you guys some more examples here. BABA, one of the charts we were talking about, a Chinese company, Alibaba. Again, right now I am staying far away from anything to do with China. These stocks have just been absolutely battered. You can see it with no end in sight here yet. Yes, probably we're getting a little bit low here, so there is going to be a rebound potentially up to these levels soon. But it's a chart I don't want to get involved in right now. Again, the only way I'm going to be looking at a chart like this is to the short side. And it's going to be when this thing comes back up and tests this trend line, I set my 1 hour trend line either at a horizontal or diagonal support. When that breaks, go short again. But you can see here, guys, on a 1 hour time frame, it just keeps hitting this resistance and getting cooked. If you were holding BABA from earlier this year, you were down massively. Well, let's see exactly what this chart is done. Yeah, down 45%. Can you imagine if the broad markets were down 45%, the panic that would be ensuing? But obviously, thank goodness we aren't. But yeah, these Chinese stocks, anything China right now, I don't want to be in. These charts look terrible. You can see the alignment of this trend line, the dynamic trend, pushing down, pushing down, pushing down, pushing down. A chart I want to avoid at all costs. A chart I do not want to be in. Baidu, same thing. Just absolutely hammered again today and has been since earlier this year. Do not want to be in Baidu right now. BLIN. A chart here, potentially, okay, this is a chart that I'm potentially looking for opportunity in, but again, we need to be careful here. The alignment of the 125, 200, you can see right here, pushing to the downside. Yes, there is some hope because of the alignment of the dynamic trend. Still looks to me to be okay, but I definitely do need to see a break on a 1 hour time frame, break back above these levels to give BLIN a chance to start working to the upside again. BNGO, approaching penny stock range. Again, a fairly ugly, nasty looking chart with this just awful alignment of this dynamic trend that's been in place here since March. Just keeps pushing the stock lower and lower and lower. I don't see many redeeming qualities here. I can set my hourly trend line, but this is a chart right now I just have no interest in getting involved in. Let's look at a few more here. The chart of CAN. Again, this is the type of stock I was telling you about, guys. I'm interested on these big pumps to take short positions in. You can see here, CAN pumped. 100% pump in that thing, and then basically you can see the alignment of the dynamic trend here, still very, very bearish. Just basically just set your trend line here. When that breaks, you're going short. You set your stop obviously at a horizontal level of the break and just ride it down. To me right now, definitely not a stock I have any interest in being involved in. The only thing I would be interested in right now in this stock is a short, but since I don't often short stocks, I have no interest. Here is another chart, SIBA. Just terrible looking chart, ugly, overhead resistance, dynamic trend, pushing down, penny stock, high risk stock, ugly, bad, not good. Chart of CLNE, green energy stock, ugly dynamic trend, just pushing down, pushing down, pushing down. Another chart I do not want to be involved in. You guys get the picture here, right? The charts that I am interested in are stocks like this, right? CVNA. You can see a beautiful uptrend here in place. On an hourly time frame, the alignment of our dynamic trend looks good. So where am I interested in taking a long position on CVNA, Carvana? Well, it's very, very clear. I am looking for a continuation, basically, in a general sense, right around here. Set the trend line there, but most importantly, I want to see a break above these levels here on an hourly time frame, somewhere in these areas. This is my entry zone right here, and hopefully at that point I will also have a break to the upside in RSI, where I can hopefully count on a nice swing trade back to the upside in Carvana on a stock that, yes, has been beaten up, you know, just like most other things in the market over the past couple of days, but this chart still has a lot of life in it because the alignment of the 125 EMA, the alignment of the dynamic trend, the alignment of the 200, the structure that's in place on this chart, still very, very good. This is a chart I'm looking for opportunities in, not a chart I am interested in just avoiding like most other charts in the market. The chart here of Decker's Outdoor. Again, a chart where I'm looking for opportunity on. Where's my opportunity on Deck? Well, you can see this pretty nice dynamic trend that's in place. this 125 EMA, this 200 moving average is moving to the upside. But again, you've got kind of this double, triple, quadruple top type scenario in place here. What I want to see is a break to the upside above these levels here in deck around 441, and hopefully corresponding with that would be a break back to the upside and starting a new RSI cycle back to the upside in deck, and that would be the opportunity I am looking for in Deckers. And as you can see, guys, the charts of stocks and broad markets here, we're looking at the diamonds. The charts of stocks and broad markets basically have the same things in place, and you can see why I like the charts of the broad markets right now. They have these nice dynamic trends in place. They have the moving average confluences still moving to the upside. They have these structures in place, higher lows, higher highs. Yes, not every single minute of every day, but in general, they're continuing to put in higher highs and higher lows as time passes. So these are the types of charts. Right here, the Dow Jones, the diamonds, looking for opportunities. Where am I looking for opportunities? Very soon, right? Very, very soon. Let's see here. Kind of got this sort of structure in place here. It looks like a little bit, maybe getting set here, pulling back to these levels. Let me just quickly look here at the RSI. Yeah, sort of get a reset here of RSI, maybe get RSI to move back above these 50 levels here, and a new obvious cycle, RSI cycle taking place in the diamonds and the Dow, which will allow the Dow to continue to the upside. So, guys, I think that's basically it for this video. I'm about 25 minutes right now, but as you can see, this is a market where hopefully you guys kind of understood by those different types of charts I went through, the stuff I'm looking for in the charts and the stocks where I'm looking for opportunities. Yes, there can be tremendous pullbacks in stocks on any given day, but that does not mean you dismiss all stocks. I'm always looking for opportunities in charts with that look to me like still have opportunity, have momentum left in the chart, have good alignment of the moving averages, have a good trend in place, have some structure in place, have an RSI in place that looks good. Those are the types of charts we are looking for opportunities in. We are not looking for opportunities in charts that are buried, that have major, major overhead resistance for the past weeks, the past months, strong downsloping overhead resistance, dynamic trends that have been showing bearish for months and months at a time. Those are not the types of charts I'm looking for opportunities in. I'm looking for pullbacks in charts that have some reasonable structure in place and look good to me. And to me, those are the larger, kind of safer stocks right now. Your Googles, your Microsofts, your Apples. Some of the material stocks look good. I showed you guys Alcoa. That to me is a very, very interesting looking chart right now. So bigger, kind of safer plays. Avoid right now, not in favor, the clean energy, the EV stuff, the penny stock stuff, the high risk stock stuff, the stuff from China. All that stuff to me is stuff we want to avoid like the plague right now. Guys, I hope you enjoyed this video. Please, if you have not yet done so, make sure you go down below, subscribe to the channel. My next update is probably going to be on broad markets or another individual stock. This longer type style video here. These are always just kind of test videos to see if people are interested in this type of content, see what types of views it gets, stuff like that, kind of just to give people a different look on my regular technical analysis. Guys, I hope you enjoyed the video again. Thank you so much for subscribing. Thank you for watching. I will see everybody again very, very shortly in the next update video. Bye for now.